Thank you very much for coming. As you know, today we are doing a presentation here in Madrid with a few people in the presence face to face, and also all the rest of you that you are connected online. So we'll see if this is going to work. And I only want to see that you can, the people here in the audience can probably ask questions directly, but if you are in online, you can ask the questions on the chat, and then Flavia at the end will read the questions to us, and then we can answer them if necessary. As you know, we are going to talk about the fiscal obligations. Okay, the fiscal obligations of U.S. citizens here in Spain, and as you probably know, we have 4 different fiscal obligations. 2 of them, hold on a second, let's go back. 2 of them are U.S. obligations, which are the Form 1040 and the FinCEN 1114, which we will go through them later. And also the other 2 Spanish obligations are the Modelo 100 and Modelo 720. These are the 4 things that all the cities they have to fill up. One very, very important thing is to talk about the residency, because it's the key issue of knowing which ones you have to do and when you have to do them. And then Alejandra is going to talk about the residency first, and then we will go through the obligations one by one. Okay, thank you.
Okay, I'm going to start with the tax residency in Spain and the tax obligations in the Spanish tax obligations. In the slide that was before, it was the IRPF and the tax form 720. The tax form 720, the term to file it expired last March 31st. Okay, so unless you have any questions about it, I don't think we're going to go through it. Okay, because we are not already in the term to file. There's another tax form that we haven't included because in Madrid it doesn't really apply, which is the wealth tax. It applies in other communities, so maybe the people that are connected have some questions about it. Okay, so that's why it wasn't included at the beginning. So first step to know what are your tax obligations from the Spanish tax side is to know whether you are tax resident in Spain or not. That's important because the tax obligations depends on if you are tax resident or not in Spain. The first thing important, our tax year runs from January 1st to December 31st. Okay, so you are tax resident or non-tax resident for the whole year. You cannot be during 2-3 months non-resident and the rest of the year tax resident. Okay, that doesn't apply in Spain. So the rule is you are tax resident in Spain if you are present in Spanish territory more than 183 days. We are always talking about January 1st, December 31st. This is more than half of the year. Or the main center of your economic interest is in Spain. This means the main source of your economic interest. Okay, if you fulfill any of these, you are considered tax resident in Spain. There is also a presumption that if your spouse and children underage are tax resident in Spain, the Spanish tax administration will consider that you are a tax resident in Spain unless you prove your tax residency in another country. Okay, how you do this? With a tax certificate stating that you are tax resident in the U.S. or in whatever other country. Okay, the third one is just a presumption. Okay, so what I was saying, the status of resident or non-resident is held during the natural year. Okay, so you have to make for 2022 or 2021, now that we're preparing the tax return, the exercise of, okay, during the 2021, how many years I was in Spain, am I tax resident or not? If you are, you apply for the whole year for the rules of personal income tax return. Okay. Okay, so considering that you are tax resident in Spain, what does this mean? First of all, you are taxed for worldwide income. Worldwide income means regardless where the income has been generated or the tax residency of the taxpayer. Okay, it doesn't matter if the payer of the income is from the US or from France or from whatever, or you have been working abroad. Okay, worldwide income means you are obliged to pay taxes in Spain for the income you receive in any part of the world. And these are the tax obligations we were talking: personal income tax return, and in the case that applies, wealth tax, and the 720, which has already been filed. What's the main difference with non-tax residents in Spain? And that's why it's so important to know if you are or not tax resident. Non-tax residents are taxed only for Spanish source income. Okay, so that's why you need to know whether you are tax resident or not, because the taxation is completely different. So we're going to go through the IRPF, the personal income tax return. This more or less is a chart where it shows the limits that if you are tax resident in Spain, you are obliged to declare, okay? Regarding employment income, if you earn more than 22,000 euros from one payer or two payers, if the second one is at least 1,500, you are obliged to declare. If the 22,000 euros is subject to withholding tax, okay? So it's not the same if you receive the 22,000 euros from an employer in Spain, which will be subject to withholding tax, than from an U.S. employer. In case of the U.S. employer, because the employment income is not subject to withholding tax, you will be obliged to declare even you don't get to the 22,000 euros limit, okay? Which is more or less the second limit. 14,000 euros if it's more than one payer, compensatory payments from a spouse, or not withholding, okay? So in case that you receive employment income from the US, for example, you will be obliged to declare if you are more than 14,000 euros, not the 22,000 euros, okay? Investment income and capital gains. When we say investment income, it's dividends, interest, okay? And capital gains, if you are more than 1,600, the same, subject to withholding tax, okay? So this would apply to Spanish source income. When we say withholding income, we mean Spanish withholding income. Imputed rental income, this is the income that comes from property that is not rented and is not your habitual house. The limit is 1,000 euros and income treasury notes. And this one applies capital income, professional income, and capital income, and capital gains, 1,000, not subject to withholding tax. So in the case of US source income, if you have interest or dividends from this amount, you are obliged to declare, okay? So you can see that the limits are pretty low. So more or less, I mean, for sure, you're going to have the obligation to declare. Okay, for this year, 2022, the term to file is April 6, which is tomorrow, until July 1st. You can request to the Spanish Tax Administration the tax info, where it shows more or less the information, the Spanish information they have from you. Okay, this comes from your employer, if it's Spanish, banks, notaries, if you have sale any whatever property, I mean, all those are obliged to inform to the tax administration, so the tax administration already knows more or less what's your income, okay? This is very useful, but sometimes it's not correct or it's not complete, okay? So not always this information is 100% correct, okay? So our suggestion is always go through it, check that everything is in and that everything is correct, okay? Once you file the return, it can be to refund, okay, where the tax administration will have to refund you. They have 6 months to pay. The 6 months count since the last day to file the tax return, so from July the 1st, okay, so it doesn't mean that if you file April 6th, the term the tax administration has to refund is the same one as you file July 1st, okay? After that term, they have to pay with late interest payment. In case it is to pay, you have two possibilities: pay 100% or request the 2 installments with no interest. Okay, you can file, this is completely different from the US tax return, okay? You can file jointly or individual. In Spain, if more or less the general rule is if your spouse doesn't have any income, it's better to file it jointly. But if your spouse has income, it's much better to file individual tax return, okay? That's completely different from the US. That's the general rule. Also, if your option is to be taxed jointly, it applies to all the members of the family, okay, the family unit. The family unit means in case of marriage, the spouse plus any of the children under 18. This means that if one of your children under 18 has income because whatever reason, and the children files individually, all the other members of the family have to file individually, okay? In case of non-marriage, it's either the father and the mother and the children living with one or the other, okay? Okay, the Spanish tax return, we have the general, what is called the general taxable base and the special taxable base. The general taxable base is the one that the income is taxed at progressive rates. This means the more you earn, the more you pay. Main sources of income: employment income, income from any economic activity, real estate income, rents, and capital gains that derive from transmission of assets. This is not very common, but a clear example of this one was the child tax credit, no,
economic impact payment.
The
check.
Yeah, the stimulus checks. Sorry. So all these income are subject to the progressive rates, which can go up to 47%. Okay. The other one is the special taxable base, which more or less is savings and other investment income. Here goes interest, dividends, and in general, all capital gains. These ones have the flat tax rate, okay, up to 6,000 euros, 19, from 6,000 to 50,000, 21, from 50,000 to 200,000, 23, and from that, 26%, okay? Okay, so regarding earned income, regarding earned income, it includes in general salaries, any employment income, maternity and payment pay, Social Security, director's fee, pensions received from an ex-spouse. This is a good one, okay? It's taxed as it was employment income. And this one is not subject to taxation, okay? Sorry, to withholding, because the one that pays is your spouse. So be aware of this one, because it's very common that when it comes the moment to file the personal income tax return, it usually there's big amount to pay. There is also a foreign tax relief for work made abroad. This is very common if you are a Spanish tax resident and you work 1 to 3 months or whatever in the US for a US company. There is an exemption for that employment income that can go up to 60,000 euros. But it is requested that the work is made abroad. It doesn't apply for teleworking, yeah. Okay, you have to be physically abroad making the work. Okay, rental income. It's more or less like in the US. Income minus expenses. You can deduct any expenses that is related to the rental income. EV, community, renewal, mortgage, the depreciation. There is also a 60. This doesn't apply in the US. In the US, 60% deduction if you are renting. If the rent is for habitual residence, okay, long-term residence. It doesn't apply for short-term like Airbnb and things like that, okay? Also, and this is something that, I know it's difficult to understand when you are not Spanish, even if you are Spanish, but if you have a property that is not your habitual house and it's not rented, it's just for your use, your personal use, your second house or whatever, you have to declare it for this value, okay? Even there is no rent for that property, the tax administration considers that that is something that you don't have a rent because you don't want to, so you have to include, okay, the value as presumed rent, okay? This one, which is not a big amount, but it's something that the tax administration, the Spanish tax administration is chasing. In the past years, these ones, rental income and this income is something that they have been chasing because, of all these Airbnb things and, all these. Okay, so be aware of all this income rent. Okay, non-residents. None of you are non-residents, right? Okay, we're going to go, that's the difference is that you are only taxed for Spanish source income, more or less at 25% tax rate, okay? That's the general rule we're going to go.
Right.
Okay, more or less the same. I'm not going to explain this because it doesn't apply to any of you. Beckham Law, any of you are under the Beckham Law? No?
Super is asking in the webs.
Okay.
Not about this thing, so if you want. Okay, yeah.
Okay. Well, the same. We're not going to explain this unless there's someone there that is interested. So we'll skip this. Modelo 720, just a brief introduction because, I don't know if there's someone that didn't file it, but more or less you are obliged, there are 3 blocks. One is accounts, the other one is real estate, and the other one is investments. So if any of the 3 blocks has a value of more than 50,000 euros, you are obliged to declare. The term expired last March 31st. So if any of you was obliged, he would have to have filed it already. So unless you have any question about this, we're going to skip it also. Okay, and this is the US part, so we can go through the questions if you want.
We want to do them all, and then we have the questions at the end.
The questions at the end, or they are asking things, but whatever you want.
Well, if they're asking questions about the Spanish part,
yeah.
Spanish, yeah. Wait a second. So, wait, because it was at the beginning here. Here, wealth tax. Okay, in Madrid, we still have to file, even though we do not have to pay, correct?
Yes, if you have more than 2 million euros of wealth.
Wealth tax. Okay.
Yeah.
Another one. What if your spouse is in Spain, but you spend less than 183 days in Spain and work in the US? U.S. citizen.
You are non-resident, but
So, yeah.
you have to be, your spouse is tax resident, and you have to be prepared in case the tax administration asks to provide a tax certificate that states that you are tax resident in the US.
Okay.
Well, and that's important when your spouse files the personal income tax return. The tax form asks for the spouse name and if, and there's a little cross that you can include that says that the spouse is non-tax resident. So that's important, because if not, you include everything and it shows as if the other one is tax resident.
Okay. If one files individually in Spain, can we still file only in the US?
Yes, sure.
For sure. Yeah. What is the third tax in Spain outside of Madrid?
What is what?
The third tax in Spain outside of Madrid. This is Linda, and I don't know what you mean exactly. So, it's Linda Regan.
The tax applicable.
I don't know what's.
It's the wealth tax, bro.
What is the third tax? Maybe it's wealth tax in Spain outside.
It depends on any community.
Yeah.
I mean, if it's wealth tax, you can check in the community where you live.
Okay. Wait. It applies to me, not a fiscal resident yet. I don't know, Michael, if he's asking about. Who knows? Crypto in a cold wallet. Do I report in FBAR 720?
In 720, not until next year.
And FBAR for.
And the FBAR, yes.
Stimulus check. Did you say that a stimulus payment from the US government is taxable by Spanish tax?
Mm-hmm.
Thank you.
Yep,
Yeah,
it is.
Okay, Joel Rodriguez. I'm retired in Spain with no sources of income originating in Spain. What can I expect in terms of taxes imposed by Spain if my only source is passive income from Spain?
From Spain, not from the US.
Yeah, I think he makes something like that.
What we were saying at the beginning, it doesn't matter where you obtain the income. If you are tax resident in Spain, I would like to declare if you have passive income from US, you have to include it in the Spanish tax return under the what we were saying about the what's called the special taxable base, which is more or less the passive income in the US. But yes, you have to declare it.
Okay. Yeah, that's all.
That's all from Spain.
Yeah.
Okay.
Okay, then let's see if we can do the 1040 and the FBAR quick. Basically, because we have seen what happens in Spain, and then this is more or less similar in the sense that this is the tax return that you have to do in the States as U.S. citizens. The same as in Spain, you have to declare, you have to report worldwide income, earnings from self-employment. This is basically corresponds to the first slide that we saw on the limits on the 1040. And then remember that the earnings from self-employment is if you have to declare if you earn more than 400 euros, which is very little, obviously. And then the gross income, if you are more than 65, is 12,000. And if you are married, and this is something that happens, they changed it 3 years ago. If you are married filing separately, the threshold is $5. So that means that everybody has to do it because you get $5, even your bank account in Spain that they don't give you anything, then you have these $5. So remember that for the States. The due date, as you know, is the April 15th, and for those living in Spain, there are 2 months extension automatically that you put in the statement in the return, and then it goes all the way to June 15th. And as you probably know, we asked for all our clients, we asked an extension all the way to October 15th. So you have plenty of time to do the Spanish return first, and then after that, the US return, which is the normal thing to do. A special consideration for taxpayers in abroad is basically the treaty between Spain and the U.S. on non-open taxation, and things where you can reduce your taxable income is basically with the foreigner income exclusion, which you can exclude out of the earned income, $108,000, and also you can also use the foreign tax credit, in which they offset all the taxes that you have already paid in Spain from the same income. You offset them in the US with the same amount in dollars. And then you know that another thing that is important is the foreign information reporting, the FATCA, which there's something that started in 2017 more or less, and is the 8938, which basically asks you to report all your bank accounts. It's very similar to the FBAR, the foreign bank account report, but it's not the same. The 8938 is included inside, is part of the 1040, and then the threshold is if you're filing single or separately is 200 anytime during the year and 200 at the end of the year, the 31st, or 300,000 obviously, and anytime during the year. And if you are filing married, filing jointly, then it's 400,000 and 600,000. Okay. But okay, things that it is important and on the residency that we have already talked is basically establishing the residency, and is the famous 183 days, unless that you have a certificate from the U.S. administration for the IRS, which you apply with an 8802 form, and then they send you the certificate that you are tax resident in the United States, and that's what it might help you with that. Basically, the treaty tells you how and where you have to pay the taxes, and earned income, interest, dividends, capital gains, royalties, rents, and pensions and annuities. Those are all the things that they are taxed in. That you have to pay taxes here in Spain. The foreign income exclusion, as I said, is 108,000 this year, and next year will be 112 in 2022. That is excluded, but only from the earned income. It's not excluded from pensions and interest, dividends, and capital gains. Only from earned income. That's why, well, I mean, here it must be earned income, which is wages, self-employment, income tax. Doesn't include passive income. That's very important, and must be foreign income to qualify, which is a key issue for that. The foreign tax credit in the state, which is the other way to reduce your tax. Your taxes in the States, is basically to credit all the taxes that you have already paid in Spain. As you know, we pay much more taxes than you paid in the States, which normally it covers all the taxes that you are supposed to pay, and your tax return in the States is normally zero. I mean, there are taxes they paid on the applicable during the year. You cannot take on the foreign tax credit when amounts excluded on the foreign income. Of course, if you exclude part of the income, you cannot also use that part, the proportional part on the foreign tax credit. The taxes that you have paid in Spain and you are not using in the States, which is normally there is a part that you paid in Spain more than what you have to use in the States, you can carry over that during 10 years, and then you can use it in the following 10 years. Okay, one thing that everybody says at the end is, no, don't worry, is that there's something to take in consideration is another agreement, that is the Totalization agreement, in which it says that if you pay autonomous here in Spain, you don't need to pay self-employment in the States. They compensate these two, and there is an agreement between the Social Securities. So it's another agreement. The FATCA is what I told you before, is the, no, it's in 2010, I'm sorry, because the FBAR is something that Nixon filed, signed in a long time ago, obviously. Mm-hmm. But anyway, the FATCA is really the 8938, which is included in the 1040. As I told you, singles and married filing separately 200,000 at the end of the year, 370 times, 400,000, 600 any time. we'll go to the form. Okay, and the FBAR, that you know it, this is this report that you have to do with all your bank accounts, financial accounts that you have abroad outside the state, the USA, and the threshold is $10,000, the aggregate amount of all the values of all the bank accounts that you have. So if you have two accounts, one with 5,000 and one with 6,000, then you have to report all your accounts. Okay, so it's the aggregate amount of the maximum values of all the accounts that you have. I mean, if it's a joint account, you have to report the complete value of the account. Okay. Foreign bank account report. I mean, as you know, it's the FinCEN FBAR, FinCEN 1140. I mean, this is a summary. Okay, penalties, as usual, they are very high. It's 10,000 for yen you have not reported, 50% of the balances of unreported accounts, and then they have criminal charges and penalties per account and per year. So that's, I mean, you know, this is the typical from the IRS. And so let's see if we have any questions from there.
Okay, I have one.
What is the name? So we can see it.
I don't know. I don't know how to do it. Chat. Okay, so. Okay. No, yeah. Richard, wait a second. Richard, what about distribution from a 401k retirement accounts? Is that retakes in Spain as income, assuming I am a Spanish resident?
The distributions for a 401k, yes.
Yeah.
They are taxable in Spain. I mean, the 401ks are money that you deposit in a financial institution, and you never pay taxes from that. So you pay taxes when there is the distribution. So that is the same. They apply to Spain. You have to include that, and you know, in Spain, you have to include that as an earned income or as a employment income that we call it in the Spanish part. Okay, and pay taxes on the general rate.
Okay, this is for you, Alejandra. For the Spanish taxes, I've heard various answers on the subject of Roth IRAs. If distributions are taxable in income in Spain.
Yeah, the same as employment income.
So they are going to pay twice.
No.
No.
Yeah, because if you, the thing I think they are asking.
You can apply to the treaty, and then you don't pay them in the States.
Will the foreign tax credit in U.S. apply to taxes you will be obligated to pay on the U.S. stimulus in Spain?
Sorry?
Will the foreign tax credit in U.S. apply to taxes you will be obligated to pay on the U.S. stimulus in Spain? The stimulus check, I think.
No. The foreign tax credit is a credit on the U.S. In the U.S. tax legislation. I mean, the foreign tax credit doesn't have anything to do with Spain. I mean, the foreign tax credit are the taxes that you paid in Spain that you offset in your U.S. and return in the 1040, not vice versa.
No, what they're asking is that the stimulus check are not taxed in the U.S.
Okay.
And the stimulus check is taxed in Spain.
It is taxable.
So it is in Spain, but because what you cannot apply it's for a double tax relief when there is not a double taxation. So stimulus checks are taxed in Spain, but not in the U.S. So it doesn't make any sense that you apply for a tax deduction when there's a double tax deduction when there is not. Yeah. So no, it's something that you have to pay the taxes in Spain and it's not taxed in the U.S.
From how much money in U.S. I have to declare in Spain?
Well, that's the chart that we showed, the second one. It depends on the type of income. If it's employment income, anything above 14,000 euros, and if it's savings income, more or less above 1,000 euros.
That's FTC. apply to Spanish Social
The
Security.
foreign tax credit doesn't apply to the Spanish taxes. Social Security payments or the Social Security benefits are taxable in Spain. So when I'm saying Social Security benefits, I'm talking about the U.S. benefits. U.S. Social Security benefits are taxable in Spain, 100%. Even if the States is only taxable a maximum of 85%, or sometimes depending on your income, you don't have to pay taxes. In Spain, it's taxable. Not only that, said that, it's important to remember that there's both Social Securities that have crossed the figures and the Spanish Social Security, which means automatically Hacienda, the tax agency, knows perfectly if you are getting Social Security benefits from the US. And in fact, when you enter in your login in the Hacienda to do your Spanish tax your Spanish taxes, the first question that they ask you is, we know that you are receiving Social Security benefits from a foreign country. Do you want to declare them now? So you better say yes and put the amount that you received from the Social Security. Because if not, in 3 years or 4 years, which is the time that the Hacienda reacts, you will receive a letter asking you for the penalties plus the interest plus the amount that you owe them from 4 years ago and on.
Something that we haven't said, and I think that is very important because it's something that always clients ask, is about when do they have to file and what do they have to file first. Okay, so if you are a U.S. citizen and you are living in Spain, tax resident in Spain, you have to file first Spanish tax return and then the U.S. tax return. Okay, that's key. Okay, because it's the only way that you know how much taxes are you paying in Spain. So when you file your U.S. tax return, you can apply for the foreign tax credit. Okay, so many of our clients will find out that when they come to file our personal income tax return, if we don't file the 1040, and they have already filed the 1040. Okay, so that's a big mistake, and it's something that, I mean, it sounds like it's not important, and it's key. Okay, so please bear that in mind.
But if you have to pay taxes in the U.S., you have to pay those taxes before you file.
Yeah, but I mean, in which conditions do you have to pay taxes in the US? That is not a very normal thing, because you have to declare both in the States and in Spain worldwide income. So that income you have already declared in Spain. So technically, you were supposed to pay taxes in Spain, which are much higher than in the States. I mean, I know that there are some exceptions to that, but I mean, I don't want to go through them. But I mean, the normal thing, and I said the normal, we say 85%, 90% of the Americans living in Spain, they do the Spanish taxes. Well, the ones that they do it correctly. They do the Spanish taxes. They pay a lot of taxes here, and they offset the taxes. So the U.S. tax return is always zero.
Joel Rodriguez, he asked before about the source because he's having passive income from the US. If he has to pay taxes here. But he has again.
Worldwide income. In Spain, they have to declare worldwide income.
It doesn't matter that the passive income comes from the States or from Spain. If you are tax resident in Spain, you are obliged to declare.
Okay, Fernanda, I didn't file a 720 and I'm in serious trouble. Yeah.
Well, we had a conflict of opinions here. My suggestion that there has been during the last years is that even if the things have changed with the 720, and you probably know through the news, that they reduced the penalties to only 200 euros, and also the statute of limitation they have reduced to 4 years as the rest of the returns that we have in Spain. My suggestion is not to file it now until next year in January to March. Then you avoid having the 200 penalty for fairly late. And I sincerely have no idea, because this is something that has happened, last month, basically, or 2 months ago. And so we don't know what the Hacienda is going to do. So my suggestion, that's why my suggestion is not to file it until next year. When you file it, be sure that even you don't file the 720, you report in your income tax return, in your Modelo 100, the Spanish tax return, you report all the income that you receive from rental income in the States, from the passive income from interest, dividends, and so on. you have declared for the last 4 years, because that will be the excuse to say, I'm sorry, I didn't file the 720, but I will do it next year. But I have already paid the taxes. Okay, so that's a tricky part. I don't know if you want to, because Alejandra has another theory, which she feels like they should be reported immediately, just in case that Hacienda finds you not declaring. So, which is, I don't know if you want to explain it.
No, it's just my suggestion is that if you didn't do it on time, because of all these changes that have been recently, that you don't have the penalties that were applying before. My suggestion now is to file, but I mean, yeah, it's just different criteria.
That is good to know that you know that we have, even in the same office, we have two theories, and so we can continue having the discussion, and then you decide what you want to do. If you want to run the risk, or you don't want to run any risk and have the penalty for sure. So that's the options that you have.
Again, another one.
Sorry, but one. Sorry.
Again, nothing.
No, again, but what it is important, and that it's really important, is even that you file or you don't file a 720, but for sure, the income from those assets have to be included in the personal income tax return of this year and the past 4 years if you receive any income. That's for sure. I mean, we agree on that.
Yeah, that's fundamental. Yeah. I mean, that's something that nobody can avoid.
So, Juan Carlos, how can you send an estimate to the IRS for the amount you think you owe to avoid penalties? I mean, we get an immediate extension until June 15, but you are expected to pay taxes on April.
Okay, well, this is U.S. law. In the U.S., it doesn't work at all similar to Spain. Let me explain in Spain first, that is easier, which means that in Spain, you work 1 year, and the following year, in the month of April, June, you check with Hacienda if they have already withheld enough money, or you have already paid enough taxes, or you owe some taxes. And then they force you to pay in June and November, okay? But in the States, it doesn't work that way. In the States, you have to pay the taxes in advance, which means before April 15th. It is true that you have the extension from abroad until June 15th, and then the extension is also to pay taxes. It doesn't include the interest from the April 15th to the day that you pay the taxes. But I mean, that is a minimum thing. But one thing that happens in basically last year and this year is that the IRS is insisting that by law, you have to pay estimated taxes. Then if you don't pay the estimated taxes, you get a penalty. Not only that, I mean, the systems that we have, that we use, the programs that we use, they calculate the estimated taxes for the high income, more than 150,000, 175,000, something like that. They calculate the estimated taxes, and you should pay them, because even if you know that your estimation is going to be zero, you have to pay the taxes and then claim them then later after April 15. And I know this sounds ridiculous, but I mean, it is correct. I mean, it is the way it is. I mean, it's that way.
Okay, this one. I work remotely for a U.S. company, and this will be my first year filing a Spanish tax resident on a return. What to do about IRS withholding for my paycheck? Should it be zero, knowing that all will be paid to Spanish Hacienda? Will the IRS refund past withholding after the foreign tax credit applied after I file my temporary return?
Yeah, they will. I mean, in your case, I mean, your tax return will have a refund, which the IRS will send you. But my suggestion would be, for the next year, send to your employer a W-8, in which you tell the employer that you work abroad, that you are paying taxes abroad, and then according to the treaty, they don't have to withhold anything. And then you don't need to have the withholding, so you don't have to claim that later on.
Okay, Timothy, I thought by filing out IRS form 8802, IRS distribution did not need to be declared in Spain.
Well, I mean, if you file the 8802, what you are asking is applying for a certificate of tax residency in the U.S. Here the question is that you might have that, but then you might have to discuss that with Hacienda. Because if Hacienda figures out that you're American, they know that you have to pay taxes in the States, which is the only condition that the 8802 asks you to do, to file the previous taxes, then they might say that even though you are tax resident of Spain because you have been here more than 183 days. And then I don't know if I want to play, I mean, I want to play that game with Hacienda. I mean, I doubt it. I sincerely doubt it because the probabilities that you lose, I think, are very high. I mean, I sincerely don't trust Hacienda.
Okay.
Well, I think it's not actually a problem of trusting, as it's a problem of being tax resident in Spain. I mean, at the end, if you are tax resident in Spain and you plan to be tax resident in the following years, to plan to live here, you live here, you have your house, you're living here. At the end, it doesn't make sense to try to defend that you are tax resident in a country where you are not, because for sure, there's no way you can prove that. I mean, you can hold that for 1 year, maybe 2, but not forever.
Okay, Luis Piguilem. So if I have incomes from January from US and the rest of the year from Spain, I need to report and pay all in the Spain taxes?
Yeah, you are taxable resident for the whole complete year, for the natural year. So, and you have to report worldwide income the natural year.
But yeah, that's what I was saying. If the income in January, from January, it's for employment income made abroad, made in the US, you have the exemption that we were talking before. Okay, so be aware of that. If you have been working 2, 3 months, 1 month, or whatever in the US, you can apply for that exemption.
If you are resident in the US and you have account benefits, shares, and you also have I don't know, of a house that might be rented or not, how does it work? Thank you.
How does it work? Where? I mean, you have to pay taxes.
If you are
I mean, you have to report everything in Spain for sure. And then not only that, your second house, you have to report the value of the house and pay 1.1% of the
50% of the acquisition value if it's a house outside of Spain. That's if it's not rented. If it's rented, you have to pay on the rent.
Timothy, in Spain, it's generally best for married couples to file separately. However, in the United States, it would be best to file jointly to maximize foreign sharing income credit.
Yes.
Can we file separately in Spain and then jointly in the United States?
Absolutely.
Joe Rodriguez, he's coming back. That means you only have a window, of about 15 days to file the US tax after filing the Spanish tax.
No. You can ask for an extension all the way to October. You have to pay the taxes in advance and then claim the refund. But that's something the IRS assumes. I mean, that's the reason why all Americans in the States, they try to file the taxes in January because they want to receive the refunds. Because everybody, 100% of the Americans, they pay more than they should pay. And then when they do the tax return, they get a refund. That's something that for Spanish mentality is not, I mean, it doesn't work because we try to pay the less minimum and then you never, I mean, you ended not trying to pay more because in that somehow you are subsidizing the system. And then, but in the States, you have to pay everything and more, or, well, yeah, everything and more before April 15th.
He's asking because of the 15 de junio.
Yeah, but I mean, you can ask for an extension all the way to October. So to avoid the filing late penalties, which is true, is that you have to pay in advance, which means before April 15th or June 15th, whatever.
Ricardo, it's clear. Social Security payments, not taxes, will be taxes in Spain. Are pre-taxes Roth IRA accounts is that in Hacienda asking you to pay them again? As income not recognizing the prepaid taxes?
No, if it's a Roth IRA account, that in Spain is considered like a regular account, an investment account, and then you don't have to pay taxes on that. The money is yours, you pay already taxes when you earn that money, and then you deposit it in a Roth IRA. I mean, both the Roth IRA, the IRAs, the 401ks, they have credits, or they give you credits and benefits in the US tax return, but only if you need them, and then it's good when you are in the States. But if you are in Spain, I mean, there is of no use because we pay already more taxes. So you all have paid those taxes, and then you have to think about the taxes you are paying in Spain. I mean, even if you reduce your taxable, your taxes in the States, it doesn't matter because you have to pay the Spanish taxes. So the use of the 401ks, the IRAs, and so on, those tools, they are not. I mean, they're not as good as they are when you live in the States.
Well, well, never mind. Answer my own question.
Does foreign tax credit apply to the taxes you pay in Spain on income you receive from Spanish Social Security payments and must declare in the U.S. as non-earned income in U.S.? Okay.
If you received a Social Security payment from the Spanish Social Security and you live in the States, I think they
no, and must declare it in U.S. as non-earned income.
Yeah, as a pension. Yeah.
The years you file tax from Spain count for U.S. retirement?
The what?
The years you file tax from Spain count for U.S. retirement?
No. I mean, U.S. retirement is paid based on or Social Security benefits are paid on the amount of months that you or years that you work in the States. I mean, it doesn't matter. If you work in Spain, then you pay the Social Security here. And what it is true is the totalization agreement. They let you join both amount of days, so they pay you one amount in one country. Because in Spain, as you know, you need to work 35 years to get the full pension. I mean, from the Social Security. In the States, it's only 10. So, I mean, it's up to you how to compensate them. But that's something that is very easy. Not only that, I can say that the people at the embassy and the Social Security are very effective doing that, talking to the Social Security in the States, in Spain, and then they agree immediately how this compensation has to be done.
Okay, a good one. If you file the Modelo 100 before the U.S. taxes in April, are the Spanish taxes due June 30?
Yes.
But you cannot file before.
Yes, if you pay them June 30th.
No, because April.
If you file the Modelo 100 before the U.S. tax.
Before April is not possible because it's not open the tax period in Spain.
No, yes, I think he's asking that you file in April, but you pay in June. Yes.
Yeah.
I mean, for sure. I mean, in fact, when you file this, I think that's the question. When you file the Spanish taxes, if you domicile the payment, it will go through your account June 30th, even you file in April or you file in May. So you know already what's the amount to pay. You can apply the foreign tax rate, but you haven't paid formally yet. I think that's the question.
Joseph Estrada. I will assume you are correct in the scenario of receiving a tax residency certificate from the U.S. after filing a form 8802, because this means you are a tax resident of the United States for that year.
Yeah. You're not asking a question, you're making a statement, which is true. I mean, the only thing is that we said, I mean, then you have to not only do that, but if you live in Spain, be ready to prove that you live in the States, prove it to the Spanish tax agency, because they will probably ask you for your passport, for the whatever. I mean, what are the stamps that who knows?
If someone wanted to file taxes on their own in Spain, are there any links you can refer to so that we may file taxes on our own? Are there any links available in English?
Agencia Tributaria.
The Agencia Tributaria has and good luck with the English part. I mean, I know that they have translated a few things in English, but I mean, not all.
But no, the programa Padres.
Oh, no, but the program, which is the program that you have to link and log in to do your taxes, no way. No. It's only in Spanish. Well, no, it's in Spanish, Catalan, and Gallego, and probably not Basque anymore because they do their own taxes. Yeah, so.
With the Modelo 720, you file the first year, the first tax year. Then, unless you increase by 20,000, you don't need to file. Is that correct?
Is that correct? Is 20,000?
Unless you have canceled any of the assets that you already filed.
Or sell a house. Very new to okay. This is sorry. Very new to Spain. So sorry for all the questions, but can Spanish taxes be filed online?
Yes.
They are all Spanish taxes are filed online. We don't in Spain. They don't accept the paper filing anymore.
Well, not actually. Yes, you can. Yes, you can. But I mean, it's you can print it and take them to the bank. But most of them are filed online.
Yep. So if I paid estimated taxes this year already to the IRS in January, after I do my Spanish tax declaration, how do I get my money back from the IRS?
Next year in your tax return in the 1040.
Thank you, Antonio. But how or where do I send a check for my estimated taxes? Is there any place, address? Do you send a check or do you do it online? Please provide the text.
Google on and put IRS where do I pay or something like that, and then you will get it because that is the most popular link that IRS has.
Okay, Linda. My understanding is that a new Modelo 720 is only required if balance of bank accounts, investment funds, blah, blah, experience an increase of more than 20 in the individual category, investment, the blocks. Alternatively, there will also
have just said the same.
You can see.
It's the same. Increase of 20% euros or you have canceled any of the assets.
Okay.
Yeah, the two reasons to refile the 720.
Okay, Linda asks. Okay, James. Will this year will be the last one to claim the recovery rebate credit on the 1040, which allows those who are eligible to claim the third economic impact payment if they don't receive it in 2021?
Is correct. The last stimulus check was 1,400. Is correct.
Okay, Jaime. I usually pay estimated taxes on dividends income in the U.S. This year I have not paid, thinking I will be paying in Spain. Will I be subject to penalties as well as interest?
No. I assume in the States. No, because he will pay them in Spain and then we'll offer with the foreign tax credit in the U.S. So will be zero.
You might have answered this already, but I had to.
Spanish taxes first. Yeah, we already talked about
always
Spanish taxes first, U.S. taxes then.
That was supposed to another question. Okay. Linda, it was the question. Thank you. Okay. I haven't received any stimulus check yet, but I haven't done the 1040 the last 3 years either. In order to claim them, I must make the previous 1040. Sorry. James.
Yes. If you do the streamline procedure, which is the one that lets you file 3 years, and then the IRS claims or says that they are not going to audit you any of the previous years, then the tax return, you will be able to claim the stimulus checks. Absolutely.
Okay. You mentioned you agreed on paying the last 4 years worth of taxes on investment, whether filing a Modelo 720 late for this year or waiting until next year. How is this done for past tax years?
The same. The criteria is the same. Antonio's criteria is not to file. My criteria would be to go to 2018, which is the last year that it's open, and see if you had to file, and from then to...
and file all the years.
No, or not.
Yeah, or not.
Because maybe you don't have the obligation.
Okay. No, sorry. Isidoro. Wait a second. This is in Spanish. A pesar de que cada año presento el modelo 1040 que me prepara el tax, el IRS me indica que me asuste, ¿qué?
Okay, then we have an expert on that in the office, so please give us a call and I'll put you with that person, because that person had exactly the same thing that he has. In fact, he has two different Social Security cards with two different numbers, and then you can talk to him and say how he solved that. But I think that this is a Social Security problem, which I'm sure that it will solve that at the embassy. I mean, if you call them and tell them that you have two Social Security numbers.
¿A qué teléfono llamo?
At the office, 91519 4392. I mean, but it's in the website. I mean, it's everywhere. So we only have one number.
Is it worth doing the streamline to get the stimulus check? Do I must expect some fine? No, from the IRS.
No, it is worth. Absolutely, it's worth, and you don't have to expect any fines. I mean, if your income is normal, and then you don't have to pay anything. Remember that the penalties the IRS has are for the amount of. I mean, it's a percentage of the amount that you owe them. So if your tax return in the U.S. is zero, you don't owe anything, then you won't get any penalties, even if you're filing late. And for sure, I mean, if you are doing the streamline, it's in a special procedure in which they accept the fact that you are filing late. I mean, late, you're filing in one point.
If you are resident in the U.S. and you have in Spain account benefits, shares, and you also have a part of the house that may be rented or not, how does it work in Spain and in the U.S. and in Spain? Sorry.
This one.
Yeah, I think so, but
You have to, you have to declare it, and rent it or not, we already answered this one.
Okay, you have to declare in both countries. I mean, one in the States, if you are a fiscal resident in the States, and in Spain as a non-fiscal resident.
Okay.
Se puede renunciar a la tarjeta verde.
Yes.
Yes, you can.
Well, in fact, you should, when it says that,
That one.
yeah, in fact, remember that there's something the IRS states that even if the green card is expired, it doesn't mean that you don't have a green card. They consider that you have a green card until you renounce on writing directly. And then you say you don't want to hold the green card anymore. And then is when they accept that you are not a US person. And then up to that point, you have to declare in the States the 1040, declaring worldwide income. From the point in which you renounce to the green card, then you don't have to do that anymore because you become a non-resident alien. Well, as long as you live in Spain, of course.
From FBAR. If I have always done my taxes, but I like to file FBARs because I didn't know, blah, blah. I still have to do the streamline procedures, or can I just file my prior FBARs? Do I also have to amend my prior years?
I recommend to file the previous FBARs and amend them because it's much cheaper than doing the system. And also you are under less control than if you file the streamline, which at the end is an audit of at least the last 3 years.
How many years? 3 at least, no?
Well, I mean, he should file all the years, but anyway, depends on how long it goes back. But at least, I mean, there is when you file by yourself the FBAR, and you put your name, and then it tells you which is the year that you are filing, and you put a year before. It asks you if it's a year before that. I mean, it's out of the date. Tell me why you are filing it. And then one of the, I think, is the third reason is I didn't know I have to file. So I always suggest just file a couple of years before, and then put I didn't know I have to file. So you know, I mean, they know that the reason why you haven't filed before is because you didn't know. It's a little bit. I mean, it will be, I mean, to me, very surprising that the FinCEN, the Financial Crimes Enforcement Network, force you to file all the years that you have had since, I mean, you were 18. I mean, I don't think they will ever do that. I mean, I think they will not do that. But then my suggestion is to just put that you didn't know how to, I mean, that you don't know that you have to file.
Arya, yes. He didn't file he doesn't file 2021 and also 2022 if he can file 2020. Yes, he can.
Okay, well, based. I didn't know. Okay.
He has to file both.
Yeah. You can file the 2020, any year, no problem. And to James, do you have a face-to-face office in Madrid or still online? Well, we had a face-to-face office in Madrid, but since the COVID, we prefer not to have anybody coming to the office. So we tend to do as much as possible online, unless there's somebody needs to come or wants to come or to visit us. Well, then we'll assume. We have online consultations in the evenings on Mondays and Wednesdays, which I answer them, and then I can see your face and you can see my face if that helps you. But I mean, the idea is not, because of the COVID, basically we close the office, even if, the people go to the office to work, we don't use it for public purposes.
Joseph Estrada is asking about tax plan.
Well, that's not actually tax planning. The ideas, those ideas that you were saying, yes, it works, but as long as you want to move to Madrid or you want to buy a house, at the end, sometimes looking for a way to avoid or to pay less taxes, yeah, but as long as you want to do that, if you want to move to Madrid, great, because wealth tax is 0. If you need to buy a house where you're going to live, for sure, that is not included in, well, there are some limits to including the wealth tax, but these are all solutions if they work with your life. If you live in Catalonia and you want to live in Catalonia and you want to rent a house, it doesn't work. So,
Okay. Well, it's 7:30. I don't know if there's any more questions. Okay. Well, I think that we should be closing anyway. Then let's see what this last question has.
For Roth IRAs, one pays taxes in the U.S. the year you deposit the funds in your Roth IRA. If you are a Spanish resident, when you take out these funds in the U.S., you will not pay taxes since you had already paid them?
Correct. I answered that before. They ask us that. Roth IRAs is considered in Spain like an investment account. So it's your money, and then you have already paid the taxes, so you don't have to pay taxes on the Roth IRAs. Distributions or whatever. Thank you, Timothy. Muchísimas gracias por todo. Thank you. We all appreciate it. We hope that really helped people to answer some of the doubts that they have. And as you know, we are available to through email or even in the consultations that you can do to answer, more specific questions if necessary, if you have them. And so thank you very much. And thank you for participating and for being here and being here 1 hour and a half. Okay, thank you.